Good morning, traders. It's Monday, February 24th. Taking a look at the charts. Equities are up this morning. We're seeing the NASDAQ up 0.4%, SP 500 up 0.5%, the Dow up 0.6, and the Russell up 0.75%. Now, if we take a look at the daily chart here on the right, obviously pretty big drop here in the market on the SPY on Friday. Big kind of wipeout in price action. Of course, we're flirting with these highs. Every time we seem to get up here, we keep getting hit with some type of selling. It held for a couple days, but then we got another big bout of fear. If we go over to the 30-minute chart, you can see we had some panic selling. We dipped into an oversold territory, as Brian shared. And we've seen this before, where we're in an uptrend, we see panic selling, we see the oversold market condition, and generally these are short-term oversold areas where bargain hunters step in and buy the dips back up. So that's kind of still where we're at. We're still flirting with these all-time highs, and we get up here and the market gets hit. Obviously, it looked pretty bad when we look at the intraday chart of really the last trading session on Friday. Definitely a bloodbath and lots of selling going into the weekend. People getting rid of risk, worried to hold over the weekend because we have the wild card there. We got Trump always swinging his hammer and throwing out all kinds of new things that shake the markets up, which you can see as a good or a bad thing. But overall, it just adds lots of volatility. If we take a look at the 30-minute chart and just zoom out a little bit, when you look at the price action we saw last Friday, Thursday and Friday, in the grand scheme of things, it really is, we've had this type of move. We've seen this type of move and bigger over and over and over again. We keep seeing all kinds of these big pullbacks. So it's not out of the norm. And of course, the market poked to new all-time highs. And so, 2 days before that, we're at all-time highs, and then we have a pullback. That's how the market likes to do things and shake things up and try and spook people. And we tend to see spikes of panic selling when all this happens. So we'll see how this market recovers and goes from here. It is oversold. It is trying to break to new all-time highs, the SP 500. If we take a look at the QQQ, we'll just pull up the futures here so we can see today's price action on the daily chart. Market's a little bit higher this morning. And again, QQQ didn't quite get to all-time highs, got into resistance right up near these highs, and then sellers stepped back in. And this did a pretty good chunk of selling. If we take a look at the Russell 2000, though, Russell 2000 is more so the majority of the stocks. And it's not the most bullish looking chart pattern. I'm not a huge fan of this kind of pattern here. It's kind of trading sideways. It feels like it kind of put in a little bit of a double top, and this could easily break down and extend back down to this lower level. So we'll have to see how this unfolds. Typically, we see small caps generally want to lead the way, but they have definitely been disconnected with the Magnificent Seven stocks and all of that, really making it much more difficult to get a gauge of the overall market. So small caps obviously struggling a lot more. If we zoom way out here, you can see small caps really putting in more so a major potential double top. And maybe it is going to chop around here for a while potentially the major indexes like the SP 500 and QQQ potentially keep pushing and grinding higher to new all-time highs once they eat through this resistance near the highs, and the Russell may struggle a little bit more. If we take a look where money has been flowing, I have my sectors here. I usually have the defensive sectors always at the top. So if we take a look at utilities, and let's just zoom in, you can see utilities have been moving up while the stock market in general has been struggling. We talked about consumer staple having a breakout. This was like a week or so ago back over here. I was just breaking out, and it continues to push higher with lots of volume. So people are moving into utilities. And no matter what happens in the economy, we're going to still need utility companies and consumer staples here. Obviously, we're going to need all the basic supplies, and then healthcare. We all need our health. And so all of those have been holding value or moving higher. These are the top three kind of defensive plays. We can also look over at gold. Gold has been pushing up, making more or less new all-time highs and holding its value, which is what we've been talking about. Gold is the precious metal play, not silver, not miners. If we go and we take a look at silver, you can see silver has been struggling, nowhere near all-time highs, nowhere near the highs from a few months ago. It continues to struggle because it is more of a speculative play. And then if we go and we look at miners like gold miners, have been selling off when there is a lot of panic in the market. When the tide is going down or the wave is going down, it usually pulls miners with them. And that is why they've had a very nice run. But again, they're not making new all-time highs. Really just recouping what is lost in the past. And that's why we need to focus on the stronger assets like gold if you were to get in the precious metal space and play the long side. And of course, we've talked about that many times. Taking a look at the chart of bonds, if we take a look at the daily chart of bonds here, we can see it's been holding its value and holding its ground, a bit of a defensive play. Friday, so lots of selling in equities, and we saw money move into the bond market, so it's acting a little bit as a defensive play. Now, bonds are still long-term in a downtrend. I still believe that they're trying to carve out a bottom. I think we had a major market top. Whoops, let me see if I can grab a tool here. I think we had a major market top in the bond market. I do believe it is trying to carve out a bottom somewhere through this area here, a stage 1 base, and then hopefully it will start to come back up, but we're not quite there just yet. I think it still has some time to go. It's not about trying to buy bonds low, it's about trying to buy own bonds when they're in an uptrend and naturally going up. They can stay down here, as you can see here, for several years and not be a very good opportunity. We want that tide to change, and then once that tide is rising, we want to hold it and use it to our advantage. And potentially the stock market will be falling, the economy will be getting weak as the bond market goes higher. If we take a look over at crude oil has been falling out of favor, continuing to struggle. It has a really ugly chart. I'm not a huge fan of crude oil. I am, with my opinion, I am bearish and negative on the economy, negative on oil. I think we're going to see things get very weak this year. I think this is the turnaround year in terms of a financial reset across the board. I think oil will collapse down to the 45 range or so. And overall, it's just sideways and very noisy, and not too interested in this space at this point. If we take a look at natural gas, it's down 7% this morning, but it has had lots of volatility. Overall, it started to have a bearish pattern, looking like it was going to break down. Instead, it spiked up and pushed to some new multi-year highs. Natural gas is known to do this. It's called the Widowmaker. It has usually pretty ugly charts, very noisy, and is very easy at swinging you, getting you shaken out of trades. Overall, we'll see how that goes. It's got lots of volatility, and we talked about how once it stabilizes, it could go into one of these huge blow-off moves where liquefied natural gas has got that potential to have huge opportunity to the upside. But again, this is a very difficult chart to trade. It went bearish, and now it's popping back into a bullish phase and holding its value. Now, if we just step back and look at the long-term tide of the trends of the SP 500, this is the weekly chart of the SP 500. We have rising tide environments. We've got market volatility we want to avoid. We had a rising tide environment to over here. We had a falling tide environment during 2022, and we are still in a rising tide. And when we zoom in, I know a lot of people got really nervous, and we saw it spike on our fear indicators and the VIX. When you look at it, we hit new all-time highs last week, and then the market had a pullback, and we didn't even break the previous week's lows. It's just the market trying to buck people out at this point, trying to shake people out. And the fact that we hit new all-time highs the day before, and then we pulled back the next day, just goes to show how jumpy people are. In the grand scheme of things, when you look at this chart, this market isn't crashing by any means. It just had a day of distribution selling. People were getting rid of some risk ahead of the weekend, not knowing what's going to happen. And that's all it is at this point. Eventually, there will be a turnaround point. Eventually, we will take a loss and the trend change will change and the markets will start to fall. But who knows how far and when that is out? That could be weeks or months. It could be this week. We'll have to see how that unfolds. But right now, the underlying tide is still up. Our shorter term trends are still bullish. And really, the market poked to new all-time highs, and there's a bout of selling, some profit taking, and some fear selling. And again, our short-term indicators are telling us that we should see this market want to pop and move higher. Simply, we've got the panic selling, oversold market, and hopefully we'll see this move to the upside this week and get back up near those all-time highs. Anyways, that's about it for now, and we'll go from there. Take care. Bye-bye.